What's going on, guys? So today Bitcoin's actually pulling back. After all this running, it's definitely due for a little bit of a cool down. We'll see where it goes from here, but we also just received CPI. So we're going to look at that. We're also going to look at a couple other things regarding Bitcoin. Let's get started, guys. And first off, let's take a look at CPI. So I'll feature this little clip for you, but basically CPI did come in higher than expectations. Overall prices rose 3.2% from a year earlier, which is up from 3.1% in January. And looking at core increased 0.4%, and we also saw a similar rise in the previous month back in January. But this lowered the annual increase from 3.9 to 3.8%, which is the smallest since May of 2021. Now, in terms of rate cuts, that means we're likely going to receive less for the year. The past couple of months, futures have pushed out their forecast for the first Fed rate decrease from March to June now, and are now predicting 4 rate cuts rather than 6. And quoted by Nationwide's chief economist Kathy Bosjanik, while we thought a May rate cut was on the table, it's increasingly likely that the Fed waits at least until June.
Well, the headline number is probably energy driven. We saw gasoline prices for the month up 3.8%. They fell 3.3% in the month of January. So big difference there. Food, everybody keeps an eye on food prices because we all got to pay that. And for the month, we saw food prices flat, which is a bit of a surprise. There was an expectation they might rise some. But I think in the core, the two biggest things that affected the core were used cars. They were up for the month by 0.5%, which is in contrast to the 3.4% they declined in January. So a big change there. And then what we're seeing for owner's equivalent rent is that we have seen that come down a little bit. It's up 0.4 compared to 0.4 for rent. So the divergence that we saw in January has gone away. I'll look for some other big movers, but it looks like used cars played a big role, energy played a big role, and food did not, which is a bit of a surprise.
Now, one thing to realize about the used auto prices is we are at tax time, and typically we do see quite a spike with used autos, just a bit of an increased demand, which increases the price. But I do expect that to start coming in lower as we get past tax time. So maybe we see used autos rise this month, but overall, as we get towards the summer, used autos should also come down, hopefully contributing to a lower CPI. Alright, now I want to quickly mention a couple of the Bitcoin miners before we get into Bitcoin here. But as I've said in my last video, people were watching what might be a head and shoulders, maybe just a choppy pattern it'll turn out to be. But once we broke this uptrend, we did see a pretty quick fall. And now we're approaching this ascending support line. We'll see if the market actually plays it and bounces, or we'll see if cleanspark tests its previous support level. It was a bouncing off point a few times. But this low 15 area should play out as a support. If it does not, however, we are probably headed to about 1380 or so, which was a previous resistance back in 2023. Now, regardless of what cleanspark does over the next couple weeks, over the short term, I'm very bullish on cleanspark, and I believe it will be much higher in price, and we will see new 52-week highs as we progress through the rest of this year. Now, looking at btbt, they do have earnings coming up at the end of the month, and that'll dictate price when we get there. But until then, we're probably going to follow this descending channel until we either break out of it or come down and test this $2 support level. Was a previous very strong support, bounced off of it many times. And even with btbt, I'm very bullish on this here. I am a buyer here, and I have been buying on the descending channel we've been in lately. btbt is now 58% lower than the price it was in December 2023. And if this isn't the market pricing in rewards being cut, then I don't know what this is. And here's something really interesting. Bitcoin has about 6 months until ETF liquidity crisis. And the founder and CEO of CryptoQuant predicts a Bitcoin supply shock basically within 6 months. These Bitcoin spot ETFs now hold nearly $30 billion of Bitcoin, and they have in fact become the most successful ETF launch in history. And the CryptoQuant CEO and founder said, bears can't win this game until spot Bitcoin ETF inflow stops. And if this trend continues, this buying trend, this huge inflow in the spot Bitcoin ETFs, if this trend continues, a new phenomenon could arise where there will not be enough Bitcoin available to meet demand. And he also points out these accumulation addresses, and these are wallets with only inbound transaction. Well, this needs to roughly double before the crisis sets in. And just look at this huge growth we've seen over the last couple of years of these accumulation addresses. I don't think this is stopping anytime soon. I think it's very likely we're going to see a huge supply crunch, obviously after the halving, once incoming supply gets cut in half. This will drastically contribute to it. And Bitcoin spot ETFs now near $60 billion in net assets. And check out what happened yesterday. On March 11, Grayscale GBTC experienced a significant net outflow of 494 million. However, we saw net inflows of 562 million for BlackRock's IBIT and 215 million for FBTC. These inflows just from these two ETFs alone are outpacing GBTC's outflows. And there will come a time when these outflows dry up from GBTC. And I do think when that happens, that'll be a huge tipping point. And maybe we'll even see net inflows with GBTC on the regular. Now we're at a cumulative net inflow of over $10 billion. And here's the spot Bitcoin ETF total net flows here. There were a couple net outflow days. You see a negative 158 million day back in January, another negative day, here's the zero. So basically just a couple of days that are negative and a couple days recently that have been negative. Very few. What do we typically see? What do we see more often than negative days? Well, we see more often these huge over $500 million net inflow days. And you'd think the hype might die down a little bit. Well, that's not necessarily the case. There was, of course, an initial huge amount of hype, 732 million of net inflow, and we haven't reached that yet, but we have come very close. Nearly 700 million here, 650 million here. Once the net outflows from GBTC clearly are going down more and more, I do think we'll have another record day at some point. We will see another over $700 million net inflow day. Looking at Bitcoin, Bitcoin is now finally cooling off from nearly $73,000, and it does look like we're testing our ascending trend here. Keep an eye on this. If we do break this ascending trend, we're going to test previous supports such as the 68.5 level and potentially lower as levels are potentially broken. Also keep an eye on the psychological $70,000. I think what will decide us holding this level and continuing higher is going to be incoming spot Bitcoin ETF news. Are we going to see huge inflows still? Are we going to see less selling from GBTC? I think that'll be a huge deciding factor. If we see things kind of slow down, we'll probably see a little bit of a fear, a little bit of a cool down. But I think it relies on incoming spot Bitcoin ETF data for the rest of the week, whether or not we hold this 70,000 continue higher throughout the rest of the week. Ethereum also has this dencun upgrade coming out tomorrow as of this upload. This is mostly going to help layer 2s, but it also helps Ethereum's overall ecosystem, which is a good thing. But I will leave this article down below for you guys in the description. Just wanted to mention it and show you guys Ethereum on the chart. And looking at Ethereum, this might shape out to be a buy the rumor, sell the news event. Who knows? I do think Ethereum's due to pull down a little bit, test its support line. We have this strong ascending support we've been just following along. We have bounced off of it a few times here and there. Maybe we get a quick shadow wick pulling us down to 3,600 or so before bouncing and recovering and continuing onward, creating new yearly highs. And while this chart looks a little worrisome in terms of jumping in, I'm very bullish on Ethereum. I think we will see some incoming hype because of the spot Ethereum ETFs. And this is going to be around May when the decision is. Maybe it gets delayed, maybe it doesn't. But I do think there will be some hype drawing into Ethereum. And I think the big thing here with Ethereum is seeing us break all-time highs. If we can get into the 5,000s, get close to the 5,000s, at least break these previous highs, that will put a lot of eyes on Ethereum. Bitcoin has broken all-time highs, whereas Ethereum has not yet, but I think it is due to come pretty soon. And the halving is inching closer and closer. We're nearly a month away. It's crazy how time flies. I do think the halving is seen right now as a negative catalyst for the Bitcoin miners. I think it's going to be treated as a sell the rumor, buy the news event. Whereas once we pass the halving, the miners will rally. For some reason, the market sees it as a negative, purely due to the fact that before the halving versus after the halving, these miners are taking in half the rewards. But the big picture is Bitcoin is going to continue to rally in price throughout 2024, potentially into 2025. And this will more than make up for the fact that miners are taking half the rewards. Bitcoin's price appreciation will make up for it. And the market is definitely discounting this right now. Many miners are down 40, 50, 60%. And I do personally think this is the market pricing in the fact that rewards are getting cut in half, while ignoring the fact that Bitcoin's price appreciation will more than make up for it. This is overall a net positive for the Bitcoin miners, despite what the market sees right now. And I do believe the Bitcoin miners will be much higher in price as we get through the halving, as we get through the rest of this year. But thanks as always for watching, guys. Where do you think the miners are going from here? Are we going to continue to sell off into the halving, or are they due to have a run into the halving as the hype continues to draw in for Bitcoin? Regardless of what happens to the miners, I do believe it's a buying opportunity as we approach the halving. I think these miners are still pretty cheap. I do think there's still multiples from here. But thanks again for watching, guys, and I will see you next time.